I'm Charlotte McLeod with investingnews.com, and here today with me is Dana Samuelson, president of American Gold Exchange. Thank you so much for being here. Great to have you.
Oh, it's my pleasure. Thanks for having me.
Really good to be speaking with you. And just because it is our first time talking, I thought that we could start by getting your background in the precious metals sector. You gave me a little bit of a preview before we turned the camera on. So many different points of your past that I think are interesting.
Well, thank you, Charlotte. So I've been in the physical precious metals markets this is my 44th year. I got in the business in 1981, working in a vault because I could be trusted handling the merchandise. And I ended up getting a lucky break, getting a job with Jim Blanchard in 1983, who was the individual most responsible for the private relegalization of gold ownership in 1974. And I worked for Jim for 10 years, which were the formative years of my career. I started my own business, American Gold Exchange, in 1998. We're a national physical precious metals dealership dealing in the modern bullion products. And I'm also a vintage U.S. gold and European coin expert. I'm also a past president of the Professional Numismatists Guild, which is a big word to say coin nerd. And as president in 2016, it came to our attention that there was a growing influx of spurious precious metals items coming into the U.S. from China. So I conceived of and helped to establish the Industry Anti-Counterfeiting Task Force when I was president of the P&G that today works with Secret Service and Homeland Security to interdict shipments of this merchandise coming into the country. And you have to be careful who you buy from, because if you're not dealing with an expert in the metals market, the physical metals market, you could get a spurious item, which you don't want to get. And I've also become an expert government witness for the CFTC in two allegedly predatory precious metals dealerships. We're an unregulated business, and there were a couple of companies that were allegedly overcharging clients by quite a bit, and I've helped the CFTC with two cases there. So I'm trying to give back to the industry that's been really good to me. Yeah. Really
interesting background. I always love to hear about where people came from. And just because it is so interesting, I wonder if you can talk a little bit more about why that giving back is so important to you.
Well, number one, with spurious merchandise, it's defending the integrity of our product. If we don't protect the product that we sell, we don't have a business. If people don't trust us, it's over for us, right? So that was the impetus for helping develop the Anti-Counterfeiting Task Force. Another problem we have in our business is we're unregulated. So anyone can be a precious metals dealer tomorrow, and we have a good market like we're in now. We do have opportunists that come into the marketplace, and they take advantage of people. So we get good clients come into the marketplace. They inadvertently get hooked up with the wrong company. They get taken advantage of, and then they never trust anybody in our space again. And I'm tired of seeing it. So that's why when I was asked to help, I volunteered. And it's a way to try and protect the public from being taken advantage of. So that's why I'm really trying to give back. Ultimately, it's a benefit to me, but it's also a benefit to a lot of other people, which is why I'm really trying to do that.
Okay, really interesting to go into that. And let's take a look at the gold market. So again, since it's our first time talking, I was wondering if you can give me kind of your big picture take on gold. Where do you think we are at in this current cycle?
Oh, I've been in the market for 44 years now, since 1980. Actually, I started as the tail end of the last bull market was coming down from $850 an ounce down to ultimately, into the $300 to $500 range for most of my, formative years. And it wasn't until 2005, once we got into the war in Iraq after we were attacked, 9/11, and we went into deficit spending, that gold got over $500 an ounce for really the first time in earnest. And then, of course, the great financial crisis hit. We've had a lot of debt creation due to government stimulus, and we're in a second phase of that right now, following COVID. So I've really seen a lot of changes in the market, and I've never been more bullish than I am right now on gold. And it's for the drivers that drive gold. Number one, gold has been tracking our debt higher for the last 20 years. Between the founding of our country in 2002, we gained about $5 trillion in debt. And in the last 22 years, we've multiplied that sevenfold. So our debt is exploding, and the gold price is tracking that higher. That's number one. And the debt's not going to go down anytime soon. And now we have higher interest rates, so the service on the debt's higher too. So I think that's fundamentally bullish for gold. So the dollar's losing purchase power also due to inflation, right? The dollar just doesn't buy as much as it used to, and we're in one of those phases that's an inflationary. So that's another driver. Then you have economic instability, which COVID created. We could be heading towards a recession, which brings in another factor I'll get to in just a second. But we also have two wars now in the world. We have a war in Ukraine, and we also have Israel and Iran going at it. Number one, by being attacked by Hamas. Israel was attacked by Hamas, and now on the northern border, Hezbollah is taking shots at them. And it's no coincidence that the gold price peaked in April at a little over $24.38 an ounce on almost the exact day that Iran and Israel exchanged direct fire for the first time ever. So you've got that. And really, the only factor that's not in play right now is gold traditionally has an inverse correlation to the dollar and treasury yields. So when the dollar's strong, gold tends to be weaker. And when treasury yields are higher, interest rates are higher, gold tends to not do as well because you can get a yield on your money. Why would you want, an asset that doesn't pay a yield? But if we go into a recession, which it looks like we could be close towards moving into, that could give gold a real tailwind on top of all these other factors. So in my 40 years of doing this, I have seldom seen all of these factors coming together at the same time in the same place, which is why I'm so bullish on gold. If you'd asked me in 2019 when gold was under $1,350, when's gold going to be $3,000 an ounce? I would have said, oh, that's a long ways away. Now it's 5 years later, just 5 years later. Our debt's 50%, not 50%, 40% higher than it was. Gold is now $2,350, $2,375, and if you ask me when we're going to see $3,000 gold, I'm like, that's maybe in 2 years. So I'm really bullish on gold, and I'm even more bullish on silver. But it lags, and then when it plays catch-up, it tends to do so with a vengeance. The fact that it's over $30 an ounce, it's trying to right now. And I think that we could go into a Fed interest rate reduction cycle pretty soon, and that'll give gold a tailwind. If the government goes to economic stimulus like we did during COVID, of any shape or form, I think gold will catch a very large tailwind. So that's why I'm very bullish right now.
This was a very comprehensive outline, so thank you for that. And I've got a couple of follow-up questions. I think the first one I want to go to is recession, because when we were getting ready for this conference, we asked our readers what topics or questions they have, and that was definitely one of them. When is that recession coming? When are we going to get this hard landing that we've been hearing about for quite some time? Do you have any thoughts on timing, which of course is very difficult?
Well, this is the most anticipated recession that's never happened yet in American history. But what I look at is employment. It's definitely weakening. We're in a slow rollover of economic activity. So employment's starting to weaken. We just saw Danielle DiMartino Booth give a very informative speech earlier today, and she thinks that the job market is going to weaken considerably further. Leading indicators like housing sales and new housing starts are weakening. To me, it's more about the consumer, though. 70% of the U.S. economy is consumer spending, and we see credit card debt at record highs. It was about $900 billion last October. Now it's up to about $1.35 trillion. And so consumer spending is on credit cards, I think, is reaching its maximum point, and savings, it's record low. We had record high savings in consumers, just 2 years ago. So I think inflation's bite is really biting right now. And we've reached about the stretching point of that rubber band, and I think it's about to break. But, it could last another couple months. Timing is very hard to judge. But I think we're getting pretty close to a real economic downturn, primarily because I think the consumer is pretty much tapped out. People have been trying to supplement their lifestyle through other means. And one of the things Danielle brought up this morning was buy now, pay later, which is a new phenomenon. And I think the rubber's about to meet the road. So if it's next month or 3 or 4 months from now, who knows? But I think it's coming.
What have those economic circumstances in the U.S. meant for gold demand that you're seeing? Because I've been hearing a lot at this event in particular about how strong Eastern demand is, right? But from buyers here, what are you seeing?
Well, we've been in a very unusual phase, actually. When gold surged over $2,100 an ounce in April, as a physical market nationally, not just my dealership in Austin, Texas, we're a national market maker, but across the board, we saw more sellers than buyers for the first time in quite a long time. And people are seeing a record high in gold, and they're taking advantage of it. But the sellers are not the people that originally bought the gold in the first place. A lot of it are people that have inherited it from their parents, or they've had it, for a long time lying around, and they're just saying, hey, I could use some cash. So we've seen some selling, and it coincided also with the Bitcoin surge from 40,000, 50,000 all the way to close to 70,000. So I think that there was some repositioning there, which I wouldn't really bank on. I think people have shed gold at the wrong time. So we've seen more physical supply in the market than there has been demand, and I attribute the lack of demand because there's no fear in the U.S. market right now. Right? Stock markets have been doing good. We've been told the economy is pretty good, but I really don't think it's as good as most people have been led to believe. So absent, fear like we had during the great financial crisis or when COVID exploded and we were run over by demand, there has been a lack of demand for physical in the U.S. market. So what that has created is a collapse of premiums for physical product because the market's physically pretty saturated right now with product, and dealers are trying to shed product. So it's a very competitive marketplace. So we've all lowered our premiums a bit. We can replace at lower premiums than we would normally have to pay to buy the merchandise. So despite gold being at an all-time high, premiums are low right now, which is good for the consumer if they want to get in. I actually think silver is an even better buy than gold because if you go back to the 2011 highs, of gold was $1,900 and silver was $48.50. Today, gold's $23.75. So it's 15% over its previous high, where silver's about 30% under its previous high. So I think silver actually has a lot more percentage-wise upside opportunity, but you have to be a little patient. It'll play catch-up, but it'll do so with a vengeance when it decides to play catch-up.
Okay, so now could be a good time to buy physical gold and silver if you'd like to do that. And I know each person is different, but I always like to ask, are there particular products where you see a lot of value right now? What would you tell people who are looking to get into the sector or add to their collection?
So we're physical dealers, so we deal primarily in the most widely traded and competitively priced items. And we do that because I want our clients to have liquidity. When they want to sell, these are the easiest products to get a competitive bid on. So we deal in American gold and silver eagles, Canadian gold and silver maple leafs, and Austrian gold and silver philharmonics. If they were ice cream, they would be vanilla, chocolate, and strawberry, the most popular flavors. It means you get the most competitive pricing when you buy and also the most competitive bid when you sell, and they're easy to sell. There are other products, British Britannias, Australian kangaroos that you can deal in. That's like pistachio or another flavor. But those are the three bullion items that I like. And sometimes the U.S. Mint cannot produce enough coins or bars, the coins are really round bars, to meet demand. So the premiums can surge a little higher on those. That's when I say roll into the others. Now, I'm also a vintage U.S. gold coin expert. So these are the pre-1933 U.S. gold coins that were minted as currency back in the day that still survive. Now, these are limited to what was minted back in the day and what survives the ravages of time now. So most of these items that we like are not really rare, but they're kind of scarce. So they can give you leverage to the gold market if you can buy them when their premiums are low. And then when the demand wave hits, the premiums can expand like a junior mining stock can get that leverage, right? So there are times when we recommend them as a buy and times when we recommend them as a sell, because you might be able to get an extra 20 or 30% on a physical coin, which, if you can get that leverage, why not? And then if you want to harvest that for more ounces in the future, that's an easy trade to do. So right now there's a coin that we particularly like. It's the $20 Liberty that was minted from 1877 to 1907 in near gem uncirculated MS64 condition. That's a nerd rating for saying basically it's almost like the mint made it yesterday. There's about 160,000 that are known to exist. Its 10-year average premium has been about 50% over gold value, and today it's trading at about 20% over its gold value. And it's scarce. There's only about 160,000 known, where the U.S. Mint will make millions of gold eagles this year. This is a coin that maybe there's a couple hundred on the national market at any given time. Right now they're cheap, percentage-wise, over their intrinsic value. So that's another thing that we look at. Is this a good opportunity for you? They're a little bit more speculative than just an ounce of gold, but at times they can be a great investment as well.
Okay, that's really interesting. So a lot of options depending on which way you want to go with that.
Right, and my company's job is to help people, really help them with what they want to try and do in the physical marketplace. So we present options and then see what might be right for them, and then we try and help them. Because if we help them, we help ourselves in the process.
Very true. So you've been talking a little bit about silver, so I want to go a little bit deeper on silver here. So for gold, you're bullish on gold, 3,000 in the somewhat near term, next couple of years. For silver, you mentioned even more bullish. So for the price, what are the implications for silver for you?
Well, I think at this gold price, silver shouldn't be $30 an ounce. It should be $40 or $45 an ounce. I think that's a no-brainer. And actually, it should be over its previous two highs of $50 an ounce. It's just not there yet. I think ultimately silver could be in the $60 to $75 range pretty easily. We're in a physical silver deficit for the first time in the last couple of years, which is pretty bullish for the metal. So I do like silver a lot, but it doesn't have the cachet that gold has. Now, central banks have been buying gold at record clips over the last 2 years, and they've been net buyers since 2010 following the great financial crisis, which is a big trend change that didn't exist from the 70s all the way to 2010, when central bankers, the guys that are printing all that money and creating all that extra debt, are buying gold at a record rate. That tells you something. And they've doubled their buying in the last 2 years after we weaponized the dollar following the invasion of the Ukraine by Russia. Our sanctioning of Russia and our weaponizing of the dollar has created a need for some of these countries on the eastern side of the world to say, hey, look, we can't get out of the dollar as fast as we like because it's embedded in the world's financial system, but we can buy gold as fast as we want to, because gold in a vault can't be sanctioned like a currency in an account in the U.S. or U.S. Treasuries could be. So they're buying gold at a record rate. I think that's very bullish for gold, but silver doesn't get that cachet. It takes a lot more silver to equal the same amount of gold physically. So you have a storage issue, you have a volume issue. But silver, like I say, lags, and then it tends to play catch-up. And when it does so, it can catch you by surprise. So I wouldn't be surprised to see silver make a $5 or a $10 move from here very quickly, especially if gold can break a little above its all-time high, which is about $24.40 an ounce. If gold makes a run at a new high and gets into the $2,500 range, I think silver could be $45, $50 very quickly.
That would be definitely exciting to see. And okay, just another couple of questions for you here. I wanted to ask also about platinum and palladium. Are you seeing much interest there?
Platinum and palladium are very disappointing right now. They're undervalued by quite a lot. They're both scarcer than gold by a multiple. Platinum tends to be used industrially in diesel automobile catalytic converters, and it's gone to a discount to gold since the VW diesel scandal erupted in 2015, and it's never recovered. Palladium, I think, is a better speculation at this point in time than platinum. They're both trading close to the same price, between $950 and $975 an ounce. Palladium is scarcer than platinum. It's used primarily in gasoline automobile catalytic converters and hydrogen fuel cells. it's been as high as $2,900 an ounce in the last several years. I don't remember the all-time high when it happened exactly, but I think palladium in particular is an extremely good speculation if you have patience. It got a little under $900 an ounce a couple weeks ago, and it rebounded $100 very quickly, tested $1,000, and now it's settling into about a $975 range. I would really like it at $900 an ounce. I think at $950 an ounce, it's a safe buy. I think the world will need more of it, and I do think it has the potential to be $1,200 to $1,500 an ounce pretty easily. It's just we need a better economy. I do think, and I have no real evidence of this other than my own intuition, that it is somehow tied to the Chinese economy. So if the Chinese economy were to become healthier, and that's not going to happen in the near future, I think palladium could easily be $1,500 an ounce. But that's just my own intuition, my own, watching this for a long time.
Okay, well, I think that's certainly worth something. And thanks for going into those ones. Those are two metals I don't get to talk about very often, so that was very educational. Any final thoughts that you would leave investors with as we head into the second half of 2024?
Well, we're going into a presidential election cycle in the U.S., but I don't think either contender will do much about our debt. And that is fundamentally one of the biggest drivers of precious metals right now, especially gold. So I do think gold is going higher. I would accumulate it if you can. If it's out of your range, go for silver instead. You have to be patient. It's a great way to have a savings account that's outside of the dollar. One of my friends told me, he was very heavily invested in the real estate market. He says, I buy myself real estate and precious metals to give myself a present in 10 years. So I think that's an excellent way for you to look at it, as a way to save your hard-earned wealth outside of a depreciating currency. And that's really, I think, the best advice I can give your listeners.
Very good. I think it's a great place to wrap up on. So thank you so much for coming on today to go through gold, silver, platinum, palladium. This is great.
Thank you. I really appreciate the opportunity to be here.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Dana Samuelson. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.